you higher than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same. Please come check out the charts with me as we go right in and not waste a single second of your time with blabber. Bada bing, bada boom. Here we go. Well, this is the beautiful diagonal pitch fan. We've had it in since back here January 15th or so, when it was consolidating on this 236 of the mean reversion idea of this 706 to 706 accumulation, distribution, whatever you want to call it, idea. So this diagonal fib we are currently seeing, we saw this bounce off the 618. We came back up to the 706, we meandered around the 706 and dropped back down to the 618 here on this diagonal fib, and we are currently going back up to a rejection off the 706 here. I would have liked to have seen it come up a little bit higher and hit those liquidity pools that we were talking about. I was calling for that squeeze after the drop here to come up a little bit more. I would have liked to see it come up to enter a short. I'm not currently in any position, just to disclose. I got stopped out in profit on my long, and yeah, that was my short closed out as well. So we're still, I think, 19-0 for the winning streak. So we're gonna see how this goes from here. Let's go into the heat map here for the liquidation levels of high block. What is high block capital? Well, it's where people lock their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss. And then we can see where those people get repossessed and their money gets repossessed by the market maker and they get burnt to a crisp. So let's see who got burnt to a crisp today. Okay, so yesterday we said this pool down here was potentially a juicy target because of the imbalance that it generated, and they came down and got it. And then we talked about it coming back up to these pools up here, particularly this 2956 character at 100x at 29565. It doesn't look like we reached there just yet. We did 2952, and then enough of the longs opened up here and they started to come back down into these pools. It looks like the longs are currently imbalanced by $7.7 billion in long liquidity down below here. All these bubbles opening up here in a larger amount. Do we see a stop hunt rise before we drop it like a rock, or are they going to drop it just where it's at currently? Let's go into the higher time frame to get some narrative structure to this as we go up in the time frame. Let's see who's here. Oh, shout out to everyone here. Thank you, thank you. Booyah. All right, we're gonna skip the 12-hour, go straight to the 7-day. I hope the audio is coming in clear. I made sure to close off my virtual machine, as that seems to have been the cause for the double up of the background music audio. All right, so it looks like they came up and ate these pools of liquidity of, it looks like 10 billion plus. And there's still some more up here at 29.6, which they didn't claim yet, and some more up here. If you just go off of this 7-day time frame and zoom in and forget about everything else, you still have some 3 billion up here at 29.6, and it's currently eating into hundreds of thousands down here. So does it spawn enough divergence and knock enough 100x out to justify the move to come up here one last time with one final surge? That is the question. Let us go back to everything and look at the minutia down below as it starts to accumulate down here. Sub 28K, you're starting to get single digits in billions tapered up into the 10 billion range or more. Let's go to the higher time frame as we expand our vision to the external pools. By the way, high block capital costs a pretty penny, so consider liking and subscribing so you can get more of this free analysis every single day. As you see this on the 1 month time frame, you're starting to see this path to the upside, not necessarily out of the question here. This external liquidity pool looks like it's favoring this buy side liquidity up here. So this buy side liquidity of the shorts getting caught with their pants down could be a potential target here on this time frame of 1 month. So you're starting to see double digits in liquidity up here. This is why I'm not yet sold on the short idea just yet. This could also be a head and shoulder inverted to the upside, where you go up into this pool on this time frame. So I'd be careful if you're in a short. Not financial advice, of course, but always good to be careful. There's nothing wrong. If you're not careful, you're careless, and it's better to be careful than careless. All right, so if we look at the downside projection here as we expand our vision to the 3 month time frame, you start to see that imbalance to the downside. So that's why we put out about 2-3 days ago the idea of going up to go down. So it hasn't reached our bullish projection, which we'll show you in a minute. If it reaches that, then we might consider seeing the divergence, look for a divergence for that downward play down to these regions, because you're starting to see $100 billion down on this 25K. That's what I have on this bearish projection here on the trend-based fib extension tool. How do you get that? Well, you go to your trend-based fib extension on your fib retracement tools, you favorite it, and you click the impulse to the downside, in this case side, in this case as well, and then that will project your math, and these are the settings. If you go and pause at this point and copy them, 236 for your entry, 1382 for the take profit, and your resistance is at 706.65 and 786, and your Hail Marys at 1618. and beyond. So that's just the levels I found to be true. You're more than welcome to find your own. But like just how we put out on the stream on Monday, we said watch for this 236 rejection, and literally 2 minutes after the stream it dumped like a rock down to this level. So the 236 has been good to me, and we're currently getting that rejection off the 236. It looks like it's dropping right away now without giving us a chance to analyze. So let's go in to see who's getting eaten to a crisp. It looks like that final pool down below is getting eaten. This could be let's see. Whoa, we're getting some massive shorts open here. $297 million in short liquidity opening up here. Let's see. So that while they're going down to spike down to eat these longs, some massive shorts are opening up here, which is worrisome for any shorters because it might just be stop hunt before it goes up to eat these guys.
Fatality.
So it looks like they're eating up this liquidity pool character back here. This 178 million guy just got knocked off the table. So they're coming spiking down into that liquidity by the looks of it. Let's go back into the chart. So the 236 has been good, and we've seen rejection off the 236 here. So the projection down to the 25K area of knocking out this 41 days of long liquidity, the sell side liquidity, is a smart idea. If I were a exchange or market maker, would be to get out these guys before you send it, similar to what they did over here. So they dipped it down here and only to knock out all of these longs, and then even if you go conservatively here, it knocked out everything in this region before they sent it up higher. It's just what the structure does. These guys who are patient and waiting didn't pay themselves, they paid the price. Same here, if you're patient and waiting in this, you might consider waiting because you might find a better entry down here. So that would also coincide with the 0.5 region, which is the equilibrium of this diagonal fib level. So you don't want to buy in a premium, which we are currently at on this pitch fan idea. Your actual discount region would be down here at 19.3 or something like that, and that's also where our happy campers await us as we go to the 6 month and above. Let's go see where those happy campers are waiting if we were to go down to that, but then at that point the bullish narrative would be destroyed completely. Or would it? So if you look at the 19.4, you do have a large amount accumulating down here, over $150 billion, and you got 100 billion at 22.5, and the entire way there caked nicely. So in this 6 month time frame, the 3, the 6, and 3 and the 6 month are the ones weighing on me in terms of thinking about longing for long term and looking for a retrace into these regions to at least knock out these guys before continuing higher. However, the path to the upside is being paved quite nicely to that 34 region, so that narrative is not moot per se. You do have double digits of billions of dollars up here at 33.9 and below to 32.7. So you have about $200 billion up there, and the path in double digits is paved beyond 30,000. So they could squeeze it as we were seeing them reach up into this region. We thought about that as a possibility because nothing is 100% either way. But as it stands right now, these are mighty hot down below. Let's look at the yearly and then move into the charts. We got 20 minutes to give it to you, and we're giving it to you short and sweet. So let's take a look here. You got 90 billion at 25.6. You got 83 billion at 25.2, 76 billion at 24.8, and up above you got 40 billion at 30,004, 48 billion at 30,008, 31 billion at 31.2, and this is where it starts to fade into ambiguity, and you wonder which side it will take. You got over 100 billion now at 34.8, which is interesting to note. We passed the 100 billion mark on the 34.8 narrative. So how hot does it get before they find that interest to come up there? Just to remind you, they did leave 162 billion up here at 25.6 on February 23rd and retraced into this to knock out the longs, and then came up with the passion to grab that without hesitation. So they won't hesitate to come back to this if they do go down. It's just a matter of knocking out the longs before they do that, so they don't have to pay people on their journey to that point. Hope that makes sense, because the majority got stopped out here, and then this was a free ride for them to come grab this and not pay these guys who dreamed of lower. So let's just zoom in on this and look what we did yesterday. We were talking about just the immediate, which is more, there's more at 29.6 than there is down at 20. So just off of this time frame alone, the suggestion to go to 29.6 to stop out this pool before it goes lower, if it will go lower, would be something to think about. Okay, so let's go back to an ambiguous time frame, and then we will go into the charts. This is not necessarily ambiguous, but it does have pools on both sides, so we'll just keep it at that and go from here to the regular BTC chart, the Binance one. Okay, so we're gonna go where we went, remind ourselves where we went after the live stream. So the live stream, we were pointing out this pool down here, and we came back to that pool down there. All right, so this was where we stopped, right around here. And then boom, we came right back to it within that hour after the live stream. So they came back, ate that guy, and consolidated for a while. I tried to see if my long runner would stay in. I set the stop into profit as it started to go up, and it kicked me out overnight, but I was right in this projection. We did come up into this pool of this bullish trend-based fib extension. How did I get that? Well, this initial impulse to the upside here and the retrace down into this first retrace, not before down here, but this first retrace had the math for you where you would look for that 236 entry up above here, and we maintained that 236, so it was still valid on this idea here. But this is getting old, so I'm going to delete this now, and we're going to try to find a newer idea. So it looks like we're in this ascending channel of sorts that's like this, and we're currently seeing a bounce at the bottom of that channel by the touches here. How do you get this? Well, this is a parallel channel tool located here on your trend lines thing. Beneath that is a regression trend, which, in case you don't know how to use it, you could just 2 clicks and then that regression trend will give you the same idea. So you can use the regression trend to trap price, and we're currently seeing a bounce in that region. Let's just turn on the liquidation levels and go to a lower time frame real quick to see who was knocked out here. That was a massive spike down, equivalent to this entire candle. So they just went back and grabbed that gap on the 5-minute time frame here, went all the way down into here by the looks of it. So I was looking at this earlier and seeing there's more stacked up here, so I was kind of expecting it to come down to this region anyway. Are they finished, or are they going to come down into here? It looks like they might come down into here some more. Alright, so it's time to step out of the fibs, but let me see if we can find a better fib for where we're at right now for the bullish projection, if there is one. So I see these channels without having to draw them, so I don't like to clutter my charts with them personally, but let's just see what is going on here in the immediate. So the bearish projection is quite clear. It's from this drop to the downside, and the retrace here has the math at hello, and we're seeing a rejection at that 236 yet again. as we drop down below. This pool that I had up here at 29,793 is this region up here. Yeah, this pool, $227 million up here in this entire range, which is stacked up. We're starting to see these larger bubbles open up here, so if this imbalance remains, they could come back up into this region, although there is a big empty gap here on the liquidity pools here for it to have to go between. There is a stacked pool down below at 28.46 and 28.38, this region, and the entire region of this, if it continues lower, will be at 27.88 and below. The fact that these large short bubbles are opening up here shows that they, similar to how they wick and whack the price in one way to go the other way, they're just knocking off these big bubble pools, and they're trying to exhaust both sides before a bigger move. So I'm just chilling on the sidelines. As I said earlier, I'm not in any trade right now. I'm waiting for a better level to hit with some punch, and it's not really in that zone for me to scalp it just yet. However, I'm looking for a longer term short position. All right, so let's turn on our indicators. We're about 15 minutes left for the stream, so heads up display on. This is Momentum Master, link in the description. For more, you can check out momentummaster.info and toggle the features and read about each of the components at your leisure. We will let that load for a second. So we'll start from the higher time frame. Looks like we're getting a bounce off the cloud and the adaptive and the weighted moving averages here. We do have a cross down event to contend with here. The previous cross down event did play out with a fervor, had you at hello 3 hours prior, and boom, it came down with that nice crossover. You had that same crossover event here, boom, we played it out. Had the cross up and we played it up to the upside. So these cross down and cross up events shown by the helixes here on your leading moving average formulas down here on Momentum Master A baselines. You can read about that. It's your first sign of reversal. That's why we put them more prominent than the candles on our charts, because they are more valuable to a lot of Momentum Master traders than the candles themselves. So if you look at this, this is kind of holding the baseline nicely, and then it crosses, and that's where you would have paid yourself. And then it dumps, or considered reversal. And here you're seeing this get bought back with fervor as they created that divergence and saw these shorts open. So are they going to go up to these regions and finish our projection that we had, that we just previously removed, of coming up to these pools and clearing out this range high zone? So we had the range high zone that was hit 3 times. 1, 2, and 3. And so there's some pools up there, so it would be nice if they come up into this region and then start to fade and see some sort of divergence form up in this area. This would put you at like 5 a.m. I don't know if that's the case for the timing of it, but if you see some sort of rise up, this is Run for Profit Friday, by the way, so they're going to go running for profit on both sides. You could see that rise up to a region here. This would put you at 30,021. This would put you just up into that region, knock out some of the shorts before they drop it. I don't know, they did that here where they knocked out some of the longs before they surged it. Getting kind of stacked here on that monthly time frame. Not necessarily sold on the short just yet. Seems too easy for me. I'm gonna wait for it to get a little bit juicier, and if I miss it, I miss it, just like I got stopped out on my long idea here. All right, so yeah, let's just go back and do everything, assessing the time frames as we do for the last 10 minutes and start to build a narrative. I'm going to delete this until we figure it out. So we're holding the daily time frame cloud, which is interesting for a long idea until we break this idea, which is also this daily time frame yellow support structure. Then we're not into this mode just yet. So if we go up here and tap the ATR and fade the ATR, you could maybe preempt that and come it down for that move down into here. But as it stands right now, we're still holding the cloud. The momentum. The momentum on the daily time frame still going up. However, your volume is starting to fade out here a little bit, and the Williams is not showing me so much strength, and it's in an ambiguous point, so I'm not really gleaning anything in either direction other than the holding of the cloud with a very faded volume candle. So not super strong on the daily, but that curvature also has me weary. On the 22-hour, you're seeing this sell-off, this kind of intuition of distribution coming into play, perhaps. Sell-off wicks on these candles as well, showing that it's not necessarily as strong as it could be. You're starting to see this fade of the 22 here, not necessarily strong, appearing strong yet. However, you could have some surge up one last time before a reset. The cloud being thin is kind of interesting to note here. If it starts to curve, if we look at this carefully, it is starting to curve slightly from all of this. Are we starting to see a shift here in the cloud? This kind of curvature and thinning is suggesting that some sort of 22-hour upside play is in store. We did have a cross up event on the 22-hour time frame, so that's interesting to note. Are we going to get a surge squeeze up to the upside? That's something that could be on the table despite the Williams showing weakness. The 12-hour also getting that curve. You're seeing this curvature start to appear on the 12-hour and thinning ever so slightly. This is suggesting a potential upside play similar to what we preempted on the hourly time frame with that curvature. Let's go into B really quick. This is kind of fading, but it's just touching here until it crosses. It's not necessarily out for the count. You have 11 hours for this to open up and fake out some shorts, so be careful. It is at an ambiguous point where it could go up here or go down. It's hard to read. It's not in an exact clear level just yet. 6 hour. 6 hour time frame cloud is fading, which is interesting to note. Are you starting to see this shift to the downside here on the 6 hour time frame? The 6 hour time frame also playing some meandering games, wanting to possibly come up one last time. That coincides with our idea of that surge up into these pools. So does it see that with this 6 hour candle close or not? Not the most clear reads I'm getting here on the indicators. You're seeing a bunch of meandering around on the 4 hour as well. It's hard to make a heads or tails of it per se. We did have the money flow above the RSI here, and seeing this come down as it does, printing that bearish divergence, was a clear sign to get out of a long and potentially take a quick scalp short to the cloud. The cloud here is holding and curving in a manner here, not getting to that thin point to turn blue just yet. Still thick and potentially curving down here, so not necessarily getting to that bullish zone per se. Did just get a bounce off of that 200 weighted moving average, and you were seeing these crossover events which had us in that long from back there. If we go to the hourly time frame, once again the hourly time frame having that cross down confirmation to contend with. Could this have been the cross down thing that is playing out. We're seeing a large amount of volume stepping in, attempting to suppress this hourly time frame dump and take out some longs here. You're getting the MACD from back here crossing down on you and opening up to the downside. This is the leading MACD formula. So you can see this potentially playing out. It seems like the time we are at is not necessarily a clear signal. I would look for the London close section here. It seems like a lot of people like to stream this zone here, the London close and the baton handoff to New York. So New York opens and then London closes, and that changing of the guard, you see a surge up here, which is about midnight my time, so about 2 hours from now. So you start to see this narrative shift in 2 hours. So after I go live, after this time in about 2 hours, you'll probably see a narrative shift, and people like to claim it's when they go live, but it's more about the markets and the banks and all that stuff. So if you see this narrative structure shift in 2 hours, you're seeing a stop hunt rise here. Is that to continue to the downside? Not the clearest read today. Sorry folks, I'm not able to see it as clearly just yet. Oops. So you're getting some bullish divergence hidden on the money flow here on the 5 minute. I don't know how heavy weighted that is. That could have just been this thing that played out here. So the 15 minute is overbought, and you're seeing this kind of reset game playing with the 15 minute time frame here. The cloud started to shift back here even though you had the cross up event, and we got that cloud rejection and the bearish retest. So is this your point where you head down from here? Once again, let's recap on the liquidity and see who's entering in for one last look behind the curtain. Coffee is great. All right, so looks like you're opening up some longs here. Let's go see who they took out as we zoom in here. That 297 million bubble got eaten. They surged right up and said no, no, no to the 100x, and then that means they might come back down into these pools. Or are they interested in that 297 million up at 2939? We're about to enter the weekend, so it's going to slow down a bit for the liquidity. Are they starting to build both sides for a bigger move towards the weekly candle close? They may not make this move tonight. It might be something they hold on to all weekend, unfortunately. We'll see. But it looks like they're building this narrative down to here at 2846. There's a big thick band down here at 2846. Let's put that on the counter, on the chopping block. 2846. Alright, so we're going to put that on the chopping block here, and we can remove this guy because they got destroyed. So that's for the downside play. It looks like they hook, line, and sinkered somebody, so that could continue at least to see the hourly play. Once again, the 4 hour is not on your side either, so anything that would be up to the upside would be kind of a fake out in my mind to see some inducement. If they went to go here, it would be to induce to get some energy to go attack the downside. So the fact that it's holding this cloud and the cloud is curving is interesting to note, and the 12 hour and the 22 hour cloud also starting to curve ever so slightly is something to be wary of if you're in a short. If you are in a short from up here or one of these wicks, then more power to you. Just make sure you have your stuff into your stop loss and stuff into profit, because you never know. And that's why I got knocked out into profit profit as I slept. All right, but the 6-hour cloud fading here and the volume tapering off, this 6-hour candle structure is kind of bearish. So are we going to roll over here on the 6-hour time frame and cascade that? The 6-hour time frame did have this crossover event, but it was short-lived by the looks of it, and the bearish ATR is still intact. So until you can go above bearish in nature, but you have 5 hours for that, for a lot of stuff to occur in that meantime. So the hourly time frame is what you're looking at. And the hourly cloud was previously holding intact. Now we've broken beneath it with that shift to the potentially to the downside. We broke beneath it. So if you get this bearish retest and fail this cloud, then you could see this rollover down into these regions. Just go with the crossover of the hourly here. The crossovers play out true until they switch sides. So you could see that play out here some more. Looks like it's just getting started on the hourly time frame. So if you're in a short, more power to you. Rainier put out that idea of not longing the flag here. That was not my cup of tea either. So if anyone did take that short off the bearish divergence here, congrats. You might see this continue until the momentum of the 2-hour shift 2 hours from now, as London changes the guard to New York. So this could be a 2-hour play down to here, takes out all the liquidity down here, and then we'll see and reassess at that point. All right, ladies and gentlemen, I have to get ready for the NASDAQ futures and have fun scalping that stuff with my guys over at Momentum Master. If you're interested in getting funded and all that stuff, the link is also in the description. Please check it out, and Momentum Master as well. I hope you enjoy your day, and I will catch you guys on the flip side. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share, an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we will do the same to bring the precision, the accuracy, and the fire to our analysis. So thank you for coming in, and catch you